Hi everyone, so welcome to Single Values. So today I want to talk about all the US EV makers that are pure EV makers, and these ones include Tesla, NIO, Li Auto, Xpeng, Nikola, Fisker, Electromechanica, Lordstown, Hyliion, Workhorse, Candy, Akimoto. So these ones are the main ones. If I've missed any that are also pure plays, feel free to mention it below, and I can always add this and talk about this chart in a later date with more updated numbers as they go. So first one on the list is Tesla. This is by far the largest one. Valuation is about 386 billion, though much higher because we just found out today that Tesla will be included in the S&P 500, and they will be included from around the middle of December. Hence, I expect the stock to be brought up quite heavily leading up to that time. So that valuation could be a lot higher. Cash reserves are about $14.5 billion. And you can kind of see for quarter one, 88,000, quarter two, 90,000, quarter three, 139,000. Those numbers are very impressive, particularly with all the other manufacturers listed here. And they've been making profits for the last 3 quarters, and you would expect they would make profit for the 4th quarter as well. Likely even more profit because they're expecting 500,000 as their target this year. And given that these numbers, in order to get to 500,000, we'd have to get to close to 200,000 vehicles manufactured for quarter 4, which will really boost that profit if they manage to get there. And the revenue, again, also very impressive, 6 million apiece for the first 2 quarters, 8.7 for quarter 3, and likely substantially higher for quarter 4. And in, if we compare this to NIO, it is a $62 billion company, having risen substantially in the last few months. Like a lot of people brought in, and the stock's just been going crazy. But in a sense, it's just coming on par in proportionality with the Tesla market valuation, which I kind of saw coming. But I didn't realize people were going to push it that far because there is that kind of, awareness that it is based in China, and there is some skepticism that what if there's fraud, or what if the US decides to delist these Chinese companies, then you've got a problem on your hands. I thought maybe the market might kind of be a bit more cautious around this valuation. But no, market's very fine with it, and I've given an on-par valuation of Tesla, if not even a little bit higher, given that how established Tesla is. NIO, I guess that, production-wise, they're ramping up very well. They do have about $3 billion, including the capital raise that they did, and this is based on a quarter 2 number, since the quarter 3 numbers are not out yet. They will be out tomorrow, so it'll be interesting to see what those are like. But from quarter 1, when they did just about 3,000 to ramping over 10,000 for quarter 2 and quarter 3, that is very impressive. They are still making quite a decent loss at 243 million for quarter 1, 164 for quarter 2, but it's no problem. They've got at least a couple of billion by the time quarter 3 comes along in terms of those results. So I wouldn't worry too much around the capital burn right now. The ramp up rate is very impressive, but of course compared to Tesla, they still have a lot to do to catch up. And quarter revenues are 193 for quarter 1, 526 for quarter 2, so a massive jump. Of course, it comes with the numbers. But of course, when you compare it to Tesla's, several billion per quarter, there's quite a big difference. But they're matching par on par. NIO is showing that they can sell their cars just as well. And the same thing with Li Auto and Xpeng, with Li Auto is about close to a 30 billion valuation. Cash reserve 2.7. So again, these 2 companies just listed, like several months ago, so we don't really have all the data to go off, but Li Auto did, provide a bit more of the historical data, which was quite useful. Quarter one they did 2,896 cars, and then doubled that in quarter two to 6,600, and then jumping to 8,660, which is pretty impressive. And same thing with Xpeng, they went on quarter two 3,200 vehicles to 8,500, which is really impressive, that massive jump up in vehicle production. And they're also about a $30 billion company with about a similar amount of cash, 2.85 billion. But kind of interests me is, how does Li Auto keep such a well balanced operation with just a loss of $11 million in quarter two and 15.7 million in quarter three, while for Xpeng, considering they did a massive ramp up from quarter two to quarter three, their losses jumped from 21 million to 169 for quarter three. So we can kind of see, like, yes, the costs to ramp up, it does cost quite a bit. Whereas I guess for Li Auto, like that, since their transition must be really, really smooth, because they either have extremely good margins, which it appears they do, but yeah, I'm just amazed. And also I guess they have put a big chunk of their money that they have right now in the bank, and the interest that they get also kind of reduces the loss that they currently make. But it's quite insane how low their losses compared to these other three around them. Revenue wise, they're about a few hundred million a piece per quarter. Xpeng was 66, and then jumping up to 293. So these two companies have been quite impressive. Their share price has definitely risen in a very impressive way as well. It's kind of like following suit with NIO right now. So I'm looking at these, and like the numbers are impressive. I'd say they're actually currently slightly undervalued compared to NIO. Either NIO has to come down a little, or these two can jump up to about 45 billion a piece, particularly with these manufacturing numbers compared to with NIO. Like, these guys are ramping up quick, which is really impressive. And also, as you can probably see, their numbers, like when they get about 8,000 car production in cars, they're about a few hundred million, whereas for NIO, 10,000 cars, they did about 526 million. So it kind of shows that NIO does have their cars are slightly more expensive, whereas Li Auto and Xpeng, their cars are a bit cheaper. But yeah, I'm a big fan, as long as the numbers are real and there's no political risks around this, or very little political risk. I think with the current situation where Biden comes in, Biden probably poses less political risk than, say, like Trump would. So I think in this case, having Biden in probably favors the three Chinese listed companies. And also on this list is Nikola, which has had a scandal itself, but of course things seem to have settled down a bit. The valuation has held up pretty well at $8.4 billion. They had about 900 million in the bank, and that has to last them for 2 years, or they'll have to raise more money before they can get right into their production. They are at a burn rate of about 117 million for quarter three. And I haven't bothered putting revenue numbers for these manufacturers because they are not in production, so it doesn't make sense to really report the revenue numbers when it has no relevance with the production numbers. So I've just left it clear because but I have focused on the losses, or if in any case profits, just to show the burn rate, and with the cash in relevance of the cash reserves. Like with Nikola, like you've probably heard all the stories. There's a little bit of fraud or possible fraud, so we don't know what the case is with that. to be fair, I'd just stay away from this company. It's not worth the risk, given the stuff that's wrapped around it, and also they're delivering in 2022. They are different in the fact that they're doing trucks, and the only one that's really close to that is Tesla. So I'll also Hyliion is also doing trucks, but I'd probably prefer Hyliion, given that there's no fraud that's been reported so far, so I feel like they're a bit of a safer bet, and the valuation's at 3.5, whereas Nikola's at 8.4, whereas Hyliion is about they're doing hybrids in a way, so whereas Nikola's doing hydrogen. So yeah, I guess it depends how you look at it, I guess. So there's also Fisker Motors. They did a reverse merger, so there's not a lot of information behind reverse mergers unless they really just let it out publicly, because there's no real compliance that's required of these companies until they list. They have about $1 billion from that reverse merger, and they expect to produce that on probably closer to the end of 2022. Which there is quite a lot of excitement. The share price has moved up quite a bit recently, and I do like the car myself, but I think you should also be aware the founder of Fisker did have a bankruptcy for Fisker Auto back in 2013, so this guy probably might not have the best history of running a lean operation, but maybe he's learnt something, so we look at it with caution. Electromechanica is doing a vehicle that's basically just fits one person. Some people find it very ugly, but it does come with a lot of practicality to it, so it depends how you look at it. Valuation's 483 million. They've got about 100 million in the bank, though they've started their first production. Though it isn't expected that they're going to do a great deal of production until actually the start of 2021. They expect to deliver some vehicles in the end of 2020, though not many. And their losses aren't too bad. 2 million at quarter one, about 13 in quarter two, about 15 in quarter three. So based on 100 million, they've got a nice road ahead of them where they can burn a lot more cash if they really wanted to, which they're likely to once they scale production. But that's kind of one of the stocks, that's probably getting into production quite early along this list, because apart from the top four, there's really not that many that are in production right now. The rest are looking at around 2021 or 2022. So we've got Lordstown Motors that hopes to get into production end of next year. Valuation is 3.7 billion, though it seems like the market is really pushing that higher now, because they kind of perceive that as being quite cheap, especially when you compare on the list of these EV vehicle companies right now. The EV companies, like these, if we look at Lordstown next year production, the only ones that are comparable are the ones that are actually in production right now, so hence why the market kind of sees that 3.7 is quite cheap. It did a reverse merger not too long ago, so not that much info to be going on, though not that much information you'd need to for that consideration, to be fair. And then same Hyliion, the truck maker, 3.5 billion valuation, about just over $500 million in cash, expects to make their trucks in 2 years time. Again, this is also a reverse merger. Workhorse, they hope to do a last mile vehicle like courier vans, and they have a valuation of $2.4 billion, 80 million in cash. And they hope to either start producing at the end of this year or the start of next year, and their losses aren't too bad, at about 8.2 million, 6.9 and 9.8 for each respective quarter. I put stars around those because there were some accounting figures that did affect those numbers, so I've not taken those consideration of those accounting figures because they were non-cash to begin with, and these are more cash related losses for the operation. So I've used these numbers as opposed to very final numbers. Same thing with any other stars you see around these numbers. It's just to show that there's some abnormality about the number that you should be aware of, and I haven't taken the pure number as in that sense. So there's also Candy, which is also a Chinese automaker. Valuation's about 509, cash reserves 24 million. They delivered 3,500 vehicles, though I do not know if it's actually their vehicles. They just say they delivered 3,500 vehicles in China, which they are looking at vehicle production. So I'm not able to confirm if they actually made those 3,500 vehicles. But this company is in the business of selling car parts and also battery technology. And then they recently just got a license to start selling their vehicles in the US. So they will start producing vehicles and they will sell in the US. So I don't actually know if they're actually in full production right now. Hence, I've just put a star around that number. And they've only been losing a few million each quarter. Again, this 4 million was a accounting profit, which it probably would have ended up as an accounting loss if we don't take into account that accounting figure. And they have revenues, but this is not really related to the car manufacturing side. It is more related to the battery and a car part side. But they are looking at producing by the end of this year or the start of next year. And Akamoto is also they're kind of they're not really like a car type situation. They're more like a cart. They are it's not like a full kind of like a car situation with this company. And evaluation's about 263 million, and they have about 16.9 million in cash. They hope to start producing start of next year. Their losses aren't too bad, though based on their cash reserves, it seems like they've got enough for just next year before they probably have to raise a lot more money. Those are all these car companies, and what do you think about these ones? If I was to rank these, I'd probably say I would probably go with Tesla first, because Tesla's just so well proven. It doesn't have that political risk that other some of these other companies have on this list. And it's just proven that it's one of the very solid companies that will continue to produce value each year. And if you invest in the long run, you're very sure that you probably make a good profit out of this one. NIO will follow suit as long as they don't have any political risks, or same thing with all these other Chinese companies. As long as the numbers are true and there's no political risk, then they're not too bad as well. NIO is matching Tesla on this situation, though if you were to ask me if I would invest in NIO rather than Li or Xpeng, I would actually prefer Li Auto because they run such a lean operation. Then I'd prefer Xpeng because the valuations are a lot lower compared to NIO. So I'd probably prefer Tesla, Li Auto, Xpeng, then probably NIO. And then if I was to look at these other car companies, I'd probably prefer Lordstown because they seem like they've got a real solid operation behind them, and they're producing next year, which is much better than having to wait 2 years for these other ones. And then I'd probably say Electric Mechanica. They have a proven history of producing vehicles, one of the companies they own is a subsidiary, so hence I haven't really done production numbers for this company. Rather than I'm more focused on their upcoming vehicle production numbers, because this is when they really get into like a larger scale production. And then after that, I'd probably say Workhorse would interest me because they're also getting into production very soon. And then after that it'd be probably Hyliion. I quite like their ideas around their trucking, and that the fact that they can find more efficiencies than Tesla and Nikola. So I think they have a massive selling point for them as well. And then yeah, we have the rest. Yeah, like if you want me to number these, I'd probably go. One would be Tesla. Alright, so okay, well, how about I put this number here, 1. I'd say 1 for them. I'd say 2 for Li Auto, 3 for Xpeng, 4 for Neo, and in Lordstown Motors I'd probably put as 5, and in I'd probably put Electric Mechanica on 6, and in probably Workhorse on 7, Hyliion on 8. I'm still not that sure on Candy itself. But the fact that they have that they have a license and 2 vehicles in production that will go and sell very soon at the end of this year, I'm interested to go for them. But also because their valuation is so tiny. And then I feel like I'd prefer Fisker Motors and Akamoto, and you know how I feel about Nikola, so I'd probably put them at the end. Let me know what your ranking would be for these car companies, or if there's any questions that you want to ask, just comment below. Until then, good luck investing, everyone. It's definitely a very interesting time we're in right now, where there's this whole big transition into EV vehicles. Like the valuations that's being built into these, this is a massive trending industry right now. So there's a lot of profits to be made, a lot of investments, a lot of considerations, and behind all these things, a lot of potential. Until then, good luck investing, everyone.